whenever we talk about creating generational wealth, we dismiss it by thinking that that is something that only the ultra wealthy, uber wealthy can do. And as mere mortals, that's off limits to us, and it's not. So when people come to us, they have experienced a certain level of success. So what we help them do is we show them strategies as to how to retain most of what they make legally. There are anywhere from 74,000 to 82,000 pages in the Internal Revenue Code, which is the tax law of the land. Tax laws are changing almost on a weekly, monthly basis, as you know. But there are only about 22 pages that are dedicated to tax laws pertaining to complex trusts and private foundation. These laws have been on the books since 1913, since the IRS was created. The 1040 tax code, which most of you are familiar with, the default tax structure, and then 1041 tax structure, which is elect to be a part of. Complex trusts are independent entities. However, the only one that works really effectively and efficiently is the complex trust. There are more than 80 different types of trusts in America. When we say trust, most people think that a trust is a trust is a trust. Not so. But IRS, to simplify everything, divided all of these different types of trust into three categories, actually. So a combination of complex trust and private foundation is what creates this, is the basis for this tax planning, actually. So when I started in the tax industry some 31 years ago, everybody told me that you're so fortunate that you have this opportunity to not only help yourself and your family, but your family as well. You must pay your fair share. And I always said, absolutely, yes, I agree with it. I must pay my fair share. The question is, what is my fair share? What dollar amount could be considered a fair share? And I've been a student of tax law for 30 years, and I have not found fair share in the tax code. I said, okay, let's look at our business leaders, let's look at our political leaders, and see how they determine their fair share, right? So some food for thought, basically, as to how some of our political leaders have decided what their fair share is, right? First clip was about Mitt Romney, right? Very successful person. And as always, journalists were after his life, release your tax returns, release your tax returns. And he never released his tax returns, but he did release his tax projection. And in that income and tax projections, he projected that his annual income was going to be $20 million in passive income. And the tax rate that he projected was 13.9%. He was CEO of Bain Capital, and he held the majority shares in that company. And that income is normally treated as ordinary income. How come that is not shown on any of his projections? Why is that ordinary income is not there? So if you receive dividend incomes from any stock holdings that you have to report it on 1040. How is it possible for someone in his position to be able to not report that? And if he did report it, where did he report it, right? So that was one question that came to mind. The other one was that, based on 2019 tax table, as soon as you made $38,701, you were in 22% tax bracket. And how was it possible for somebody like him, who made $20 million in passive income, to have 13.9% projected tax rate, right? So that came to mind. And then back in 2016, when candidate Donald Trump was running for presidency, in one of the debates, Secretary Clinton brought it to the nation's attention that her investigators were looking into Mr. Trump's financial matters, and they could not find any tax returns, except for the 2 years when he was applying for a casino license in the state of New Jersey for Taj Mahal. That they found tax returns, because the application required him to file personal tax returns for at least 2 years with the application package. And those 2 years worth of tax returns showed zero income and zero taxes paid. How is that possible? Now, one thing I can tell you, both of these gentlemen had done nothing wrong or illegal or unlawful. According to Donald Trump, IRS has been auditing him for 10 years. Now, there are very, very smart people who work for IRS. And if he would have done anything wrong, they would have found it by now. Judge Billings' learned hand. Some of you may have heard this name before, and he once said, in America, there are two tax systems, one for the informed and one for the uninformed. Both are legal. Here at the Wealth Builders Group, we are very fair and balanced. So we use two Republican examples, Mitt Romney and Donald Trump. Let's look at some of the Democrats, right? So here is the Clinton Family Foundation. I'm sure you have heard this name before. Look at the tax return that they are using here. It's a return of private foundation, 990 PF, right? What does that tell you? When you see an entity like that, 9 times out of 10, it's always preceded by complex trusts, which are 1041's, the form that I showed you before, right? 1041's or complex trusts are very, very private entities, okay? So you will never see a tax return of a complex trust in the public domain. One of the reasons why elite choose that entity is not only that it provides tax savings, not only that it provides ultimate asset protection, but it also provides anonymity and privacy to the highest extent. Here it is, Paul and Nancy Pelosi Charitable Foundation, our current Speaker of the House and her husband, who is a real estate developer, right? Private foundation, 990 PF. So doesn't matter if you're a Republican or Democrat or Green Party or whatever party you belong to, okay? Politicians who are part of the elite group of our country are all part of the same structure. They all play in the same sandbox, so to speak. They may be fighting over a lot of other things, but this is one thing that they all agree with and come together on, right? And benefit from. Let's focus on Warren Buffett just for a second. Now, his tax rate is lower than his secretaries, but still it begs the question that how is that possible? One of the richest people in the world, his tax rate is lower than his secretaries, right? So something to explore and look into. Now, an interesting point to note, his father, Howard Buffett, was a lawmaker, actually. He was a congressman and from the state of Nebraska. And when he went to Congress, he learned all this firsthand because that's what's going on. So he learned it, and then he came back and implemented these rules and these laws into his family's financial life and benefited greatly from it, right? Then Bill Gates in January of 2019 said, the government should require people in my position to pay significantly higher taxes, right? What an honorable thing to say, right? You think he's being altruistic about this or he's gloating?